What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Linder. Today, I want to take a look at a recent video from George Gammon. He is starting to become more and more in line with my view of the markets over the years. He's learned a lot from Jeff Schneider, which I have learned a lot from Jeff Schneider, except I add in why Bitcoin or why money is going to evolve towards a Bitcoin standard versus away from a credit-based standard. But I watched it. I talked about it this morning on the CPI live stream. That was a Telegram exclusive. So if you guys want to join me for some of those live reactions to data drops, join the Telegram. The link is down in the description. So let's share the screen and get right into it. If you guys don't know George Gammon, he does Rebel Capitalist. I'm sure you guys do know George. But he doesn't bend to, hold on one second. All right, he does not bend to the inflationista narrative. He is his own thinker. He's not by, I mean, he is now a macro analyst, but that is not his background. So over the last few years, he's come into this field and he's done a very good job, I think, learning from good people like Jeff Schneider. And so he's starting to get closer and closer to, I believe, the more correct way to do it. But as we watch through this video, you'll get a taste of my particular macro thesis. And if you're the first time watching the show, thank you for coming. Make sure you like, comment, subscribe. Okay, let's just go into this. Let me make sure that I'm sharing the audio. I just stopped sharing and reshare again. Okay, it is sharing audio. And for Telegram, I'm going to share a different screen for you. There we go. All right, let's hit it.
We go to this chart, and this is, we give credit here, this is Texas A&M University. And so they came out with this blog post, is there a limit to government? Well, there is a limit to government as far as a percentage of the economy. That would be 100%. Now, the problem is when you get to 100%, the government.
I mean, theoretically, it's 100%, but there's always going to be a black market. And so I would say practically you can never get to 100%. Practically, I would say it's probably about 90%. There's always going to be a 10% black market. I mean, even today, it's been a long time since I've looked at these statistics, but if you count black and gray markets, gray markets would be black markets in some countries, but legal in other countries. You get to like a third of global GDP is black and gray markets, something like that. So even if you had government being 100% of the economy or 100% of the legal economy, there would still be a lot of the economy that's black market. And I would argue that it's probably higher than 10%. It might be 20%. I mean, just think about the Soviet Union. When you had the hardest communism, you probably had the most black market stuff going on. So what was her name? There was a really, she did like not the Bitcoin Manifesto, but she did some videos back in the day. She was kind of influential in Bitcoin in the early days. And she had this takedown of government control of money and all of that. And she said that in the Soviet Union, the black market was like rodents behind the walls, that there was always something going on, always some people doing their black market business, and you can never stamp it out completely. So again, theoretically, you can get to 100%, but practically, I would say 80% is probably about the limit.
Controlling 100% of the economy, that is communism. That is what Russia did let's say 1990. And as we all know, it didn't work very well. it didn't pan out for the average Joe and Jane. And it led to quite literally hundreds of millions of people dying as a result. So
not in Russia. I mean, I get what he's saying, and I agree that democide by socialists and commies is the leading cause of death in the 20th century, but it's not hundreds of millions in Russia.
we know that if the government gets to 100% of the economy, by definition, that is communism, Marxism, socialism, whatever you want to call it. That's the bottom line, is whatever name you want to attach to it. It's bad news for the average Joe and Jane, and it means
that's one reason why I wanted to react to this video in the first place, because he keeps calling it communism, and I disagree. He says whatever label you want to put on it, that's a good a good way to cover all his bases, but it's not communism, because under communism they don't use money. There is no spend, like ideally there's no money and there's no spending. It's all government dictates on production, right? And so it's not so much communism, because you can't have a share of spending if there is no spending. You know, usually communist countries have to use money because there's no other way to really organize the economy in a modern economy like that. But ideally, they want to get rid of spending in general. But if you get around that by saying, oh, they're a percent of the economy, they're a percent of GDP, well, there's no GDP either. So, like, you really, this metric doesn't have anything to do with communism. I would say that it's more like, you know, post World War I Germany, those types of places, not communists.
the standard of living for everybody, except maybe those who are politically connected. But I would argue that their standard of living actually goes down as well. So for the 99% of the population, their standard of living plummets. So, you know, it's and also another interesting question is, what's the difference between...
Now, I get the argument, okay? Freer markets, more limited government is ideal. But if you look at the data, okay, so I have this thing also pulled up. This is the same story that he's going over. So he's talking about percentage government spending as a percent of GDP, and look, it's going up. But if you look at like per capita income, if you look at poverty rates, if you look at pretty much anything to measure wealth and well-being of the people, it's also going up during this period. Interesting. So you have, is this not coming through? Oh, let me share this tab. Sorry. So government spending as a percent of GDP, he talks about this in the next few minutes here. And as this is going up, okay, and he argues that as this keeps going up, we're going to be worse and worse off. Now, I agree on a philosophical level, okay? And long term, if we're talking multi-generational terms, yes, I agree with that. But you also look at this chart, and as it goes up and to the right, wealth and material well-being is going up and to the right. So the actual data that he's pointing to does not back up what he just said. So let's back up a few seconds and listen to what he just said.
It goes down as well. So for the 99% of the population, their standard of living plummets. So, you know, it's and also another interesting question is, what's the difference
empirically wrong
between a massive...
And if it's empirically wrong, why is it empirically wrong? I'm not trying to say, hey, he's wrong, and at every second say he's wrong. Why is he empirically wrong here? Because there's a lot more to human action than GDP and even spending, government spending as a part of GDP. You have to think about technology. You have to think about cultural things, right? And it's not just a level of spending, level of GDP, whatever, that has well-being in mind. So there you go.
Economic depression that we saw in the 1930s and hyperinflation that you saw in Weimar Germany. Like at the end of the day, what's the difference for the average Joe and Jane? My answer is there is none. There is none. Their standard of living plummets. And that's what we're talking about here. Look at this chart. I'm going to try to zoom in for you guys, because we're going to be going over a few charts today. But this is right where it starts. So I think we can all agree, if the government is 100% of the economy, that is communism. And that is going to lead to...
No, it's not. It's actually World War II Germany.
Massive inefficiencies. And that's going to lead to fewer goods and services, which by definition is going to make us all poorer. Right? So we can all agree that 100%, and you're there, right?
Yes, I do agree with that, but empirically, we had to make it square with the fact that as this went up, so did standard of living.
Look at where the U.S. is right now. And I understand this chart goes to 2020, but I'm going to pull up some more charts that show you we're basically right here. 46% of the entire U.S. economy is a result of the government spending. And you all know that government spending is going to make the economy far less efficient. It distorts the economy. Going back to the example of communist Russia is perfect, right? So you can imagine economy.
Well, okay, I get that from an Austrian perspective, but I think government is a market actor. And yes, they make the rules. Yes, they have monopoly of force and all this stuff. But it's more like the soil of the market. Is that soil fertile? Is it dried up and rocky, or is it lush loam and well irrigated and just ready to grow the market? You could say that it's still part of the market. It just matters where the market finds itself in. So yes, it does distort it, but it's still a market actor. To me, nature is the market, or market is nature, and the government is also within nature. So the government is within nature. So the government has to be within the market. It can't be an external player. It has to be a player within the market, because the definition of a market encompasses what a government is.
Let's say going back to the late 1800s, and we're going to go back to that in a moment here. But you can imagine an economy where the government spending, or the government as a percentage of overall economic output, was, let's say, 5%, and the private sector was 95%. What would you expect the standard of living to be doing in that economy versus an economy that's 95% or 100? See, I think we really need to take it to an extreme.
It depends on what the underlying technological situation is. If you picked a year like 1350 and you said, well, government spending is only 2% of all the economy, how come we're not growing? Well, that's because technology had stagnated. There was a deflationary impetus in Europe at the time, and you had plague. So it matters what is the background of the situation. It's not as cut and dry as saying government spending is the overall dominant factor in the economy. It's not. It's almost an afterthought. Okay, especially if you have relatively consistent and free markets. So like these things, the state and local government spending, a lot of that will be on utilities, on roads, on infrastructure, things like that, schools. Now, what they're doing is they're going out and getting bids from people. Okay, they're putting these jobs out on websites, and then these companies competitively bid. And yes, maybe some of these aren't as competitive as we would like them to be, but it is still a competitive market, and there's still some sort of free market aspect to it. So how much of that spending is pure misallocation? How much is just slightly less productive? I've said with GDP that we should have a multiplier, that we multiply it by like 0.6 or 0.75. So government spending should only count as much as 60% compared to private sector spending when it comes to GDP. Something in that ballpark, but it's not complete waste. It's not complete and utter waste, because there are some things that do have value that the government does do.
As a thought experiment to understand how this works and where we are inevitably headed. And unfortunately, I think we're headed there sooner than later. But the good news is, at the end of this video, I'm going to give you some options as to what you can do to not only protect yourself, but hopefully, I mean, I hate to say it, but better your position, increase your standard of living. Although everyone else around you, their standard of living will most likely
stay humble, stack sats. That's all you need to do.
Be decreasing. So now let's go ahead and go down. So we know right now we're basically around 46%. And you can say, well, George, that was during the cerveza sickness. No. Let's look at some more recent charts where we see that state and local is, call it 4 trillion. And the federal is 10.2. So right there, we're at 14.2. And nominal GDP is, call it 30. So we're right around the 46 mark. Unfortunately, we haven't really, we had this big spike up and we haven't dropped down like we did in, let's just say, World War II, where we had this big spike up and we dropped down. Here, we had a big spike up, but then we kind of plateaued. And if you think about the projections for spending, government spending, and then you look at the projections for GDP, you see why I'm saying it's almost inevitable that this goes higher and higher and higher. And I think it's going to go up higher at a rapid rate. So my base case is, if we're at 50% right now, by 2030, I would not be surprised if we were at 75%. And I know that sounds crazy, that the government in the United States could be 75% of the economy. But let's just do the math. Let's just think about this. We go down to this chart, projected federal spending as a percentage of GDP. Okay, so this goes out to 2051. But keep in mind, this does not include a recession. So look, even if you think the economy is booming right now because of Trump or whatever, right? I mean, that's fair. Everyone is entitled to their own opinion.
Yeah, and this chart is already behind the times, because remember, it's saying right here about 26, but what he was showing is it's up at 46 already.
But even if you think the economy is booming right now, I don't think anybody watching this video would say that there's no way we're ever going to have a recession again. I mean, nobody would say that other than Janet Yellen. I mean, no one in their right mind would say that. We will have a recession. Now, are we in?
Okay, so what I want to point out here too is that he's saying that there are certain things that are going to happen because they must happen. Like there's going to be more government spending. The percentage of government spending to GDP is going to increase. These things are what he would say is some sort of mathematical fact into the future. But what's he discounting? See, that's linear thinking from my perspective. This is always a doomsday. People are always linear thinkers. They think out and they can't see just past extrapolating this one trend out into the future. That means disaster. Oh my gosh, this is big trouble. But they don't understand the dynamic nature of this. So here, if things start getting really bad, Medicare, Medicaid, they're getting reformed, they're getting redone. And yes, it takes a huge amount of political will. But if it deteriorates that badly, as he's saying it will, there's going to be a ton of political will to change this. Social Security, same. Those boomers, sorry, they're going to be in trouble. Okay, other spending, maybe interest payments, those can come down if we keep rates, really low. And so a lot of these things can change. And yes, it has to get bad for it to change. But if you're trying to say that we're going to get to 100% government spending to GDP, apart from being practically impossible, that's assuming a lot. Okay. Okay. It's assuming living through pain and not doing anything about it. And the US has proven, at least up to this point now, as the world is being swept by this populist wave, American populism is actually non-interventionism. Okay. It's non-interventionism. It's America first. More pull yourself up by your bootstraps as well. More frontiers type of feeling versus European. I think the European populism is much more dangerous and it goes much more radical. The United States is much more isolationist when we get populist movements and taking care of our own house and making hard decisions. That's kind of the American way. That's how we deal with it. And so historically, we've gone through these times before, and we'll get through this one as well.
Recession right now? I don't know. I mean, you could make a good argument. We are, especially after the non-farm payroll. But to say that we're never going to go into another recession, and we absolutely will not go into a recession in the next 5 years, or we've somehow canceled recessions. And I know I did a video on that the other day, but even if they fudge the data moving forward, that still doesn't impact this unless they just...
With a populist government, if we go into recession, most likely we're going to do a lot more stimmy checks versus government bailouts of banks and stuff. There probably will still be bailouts of banks, but there will be much more of the stimulus check stuff. And so that's going to lead to price increases. And that can inflate away this debt. And do it in a somewhat manageable way. Because remember, the deflationary pressure is the most prevalent, the deflationary pressure. Just like you said, we're going to go into recession. Well, why is that? Because there's an overriding deflationary pressure. At the end, a bubble bursts, a credit bubble bursts in a deflationary way. And so they can kick the can. And if they do a little bit of stimmy checks, if they do a little 5% inflation, they can inflate this away. 5% inflation is not good. It's going to hurt a lot of people, but it can inflate the debt away. It's not, I don't know. Tell me I'm crazy, guys, because this just seems like he's not thinking of possible easy ways to ameliorate this stuff. He's thinking of what are the possible ways that this could go to disaster. And maybe that's the way to get clicks. Maybe that's the way to become a more popular podcaster. And I should follow some of his doomster lead here. But this is not as bad as he's saying.
Lie about he'll say lie about the federal spending numbers and the state and local, which even if they do, we're going to see this show up in the real economy. Because what I was talking about in that video is more about markets. Right? And more about just government admitting there's a recession. What I'm talking about here is the standard of living for the average Joe and Jane, and how on earth they can protect themselves, and how dire a problem this is. I mean, this is not fear mongering here, guys. This is math. This is math.
No, it's not. It's a forecast. It's not math. It's a forecast. Yeah, I'm a doomer when it comes to demographics and stuff. I don't think there's a way we can grow ourselves out of this. The best way to do it with the least amount of pain is to take a new asset like Bitcoin and revalue it way higher. If they came out, like say in 2026, and they came out and said, we're going to peg the dollar to Bitcoin at $10 million per Bitcoin, you instantly create all that wealth. You could even tax it once and be like, hey guys, we're going to tax 10% of unrealized gains or whatever, and you don't have to pay income tax on it, or yada yada yada. And people would do it, and it could raise money for the government. I'm not saying that's the best way to do it. I'm saying that's a possibility. Or buy Bitcoin. They have a lot of Bitcoin. They can buy more Bitcoin and then revalue it. So that could pay down a lot of the government debt and all of that. Now here he's talking about spending, so that's a little bit different. But the way to do a lot of this pain, to get rid of the interest payments right there at the top in the pink, you could get rid of that by paying it off with the extra value created by pegging Bitcoin very high. See, when you take away the backing of a currency, you take away a lot of optionality of the government, because the government, yes, it's not the okay. It's bad to debase the money. It is bad, but it is a way to avoid some of these big catastrophic collapses, right? Because they can debase. So that's the way the government is going to go. And I'm not saying this is a good way to do it. I'm saying if you could impose strict, sound money on everybody, that's the best way to go. But what is like one of the rules? One of the rules of government is that if they can inflate, they will inflate, right? And so most likely that's what they're going to happen. They're going to do. They have to back the currency in order to debase it. They can try to inflate it, but remember, I've talked recently about debasing. Debasing is specifically when you cut the backing. So you go from $20 per ounce of gold to $35 per ounce of gold. You've actually cut the amount of gold per dollar, right? So you're debasing. You can't do that with today's money. You can't debase it. You can inflate it away, right? But you can't debase it. Inflation would be like digging up more gold. Debasing would be decreasing the amount of gold per dollar. And right now they don't have that tool. So most likely over the next 50 years or so, that they're going to bring that back. They're going to bring back the ability to debase. And that means backing these currencies with something. And most likely, in my opinion, that's going to be Bitcoin. So, okay.
So you can, make fun of the title or the thumbnail or whatever all you want. But if you really want to have a intellectually honest debate about this or a rebuttal, debate the math. That's where we got to start. So getting back to this.
Okay, I'll debate the math. Show me the exact GDP and government spending in 5 years from now. You can't, because it hasn't happened. You are debating forecasts. You're not debating math. You're debating forecasts. And your forecasts are going to be wrong. And in crisis times, forecasts are extremely wrong. Just look at all those economists sitting up there at the Federal Reserve, all these PhDs, and they're sitting there and they have their dot plots, and they're always wrong. Forecasts are always wrong, badly. So I don't have to debate the math. I have to debate your ability to forecast. If you know this, short. If you know so well exactly what's going to happen, short the market.
I think that everyone in the right mind would assume that, yeah, we're going to have a recession. So now let's go back to see what happens during a recession or a crisis. I mean, you could call it World War II, that type of crisis. And what happens, you get the big spike, then it comes back down. But what does the trend do? It goes higher and higher and higher and higher and higher and higher. And then you kind of level up.
And what did the standard of living do? It went higher and higher and higher and higher and higher.
Out a little bit. And then you have, everyone kind of gets lackadaisical, let's say. The debt's no longer a problem. And again, you see, most people focus on the wrong thing. And this is why I'm so adamant about people not getting caught up in the debt. And oh my gosh, the debt is unsustainable. The debt's unsustainable. The debt's unsustainable. Who cares about the debt? Like, who cares? Like the debt is sustainable, right? The debt's not our problem. The debt isn't our problem. Because let's assume for a moment, because
I love that, actually. I agree. I don't think the debt is the problem at all. I think we can triple the bad situation on the debt and it would be no problem. Credit-based money needs collateral, and government debt is collateral.
Most people do is they pull up this chart. And they say, look, the debt's unsustainable because it's over 100% of debt to GDP. Okay, great. Fantastic. What's the solution there? Well, the solution is to get the debt to GDP down below 100%. And then it's sustainable, because then
if you realize that money is debt, what you are saying is we need to suck that money out of the economy. What's going to happen?
There's going to be plenty of demand for our treasuries, and interest rates aren't going to go up. Okay, does that solve our problem, or does that make it worse? It makes it worse. It makes it worse, because then there's no even fake constraint on government spending.
Yes, any way that the sound money people, which I am, I guess, a sound money person because I'm a Bitcoiner. Any way you want to fix this, you actually make it worse before you make it better. And that's what makes it politically impossible. You had to have the crisis. The crisis has to come. So you had to have the pain.
Let's just assume, as for a moment, that we could just do a debt jubilee. And we could, really. And that takes the debt to GDP down to 90% because we do a debt jubilee. We just wipe out all the debt that's on the Fed's balance sheet, the U.S. federal debt, right? So let's just assume for a moment that gets the debt all the way down to 90%. So then what most people would say is, oh, well, that's just, all our problems are solved because now the debt's sustainable. Well, are all our problems solved? Because if we go down to 90%, guess what's going to happen to this number? It's really going to moon. It's going to skyrocket. It's going to go parabolic. Because now there's not even a fake constraint. There's not even a narrative that there should be a constraint on government spending. And this, as a percentage of GDP, is going to go higher and higher and higher and higher and higher. And this is the problem. Because, like we said at the beginning of the video, you get to 100% and we're at communism. So every percentage that point of increase is 1 percentage point closer we get to communism. That's not hyperbole. That's math. Those are the facts.
Love you, George, but communism is math. I don't think so. I mean, yeah, they have the Politburo and they try to do their math up there and they try to count the economy and do all their bean counting and where they want to spend the money, where they want to do the production and stuff like that. So they're doing some sort of math, but getting to 100%, one, is not communism, and two, it's not math-based, it's forecast-based.
So then, again, we go down here and look at their projections that by, 2051, we're going to be at 32%, basically. Okay, let's assume that's true. And we're going to get to the recessions that I was talking about earlier in a moment. But assuming that's true, that takes us to, let's see, so we're at 32. So right now, federal is...
Okay, well, that's it for this because that's all I wanted to go over. Let's go over a couple charts before I bounce out of here. Bitcoin price over 120, had a good reaction to CPI this morning. Let's see, up about, from the CPI time to now, up about 1.5%. Should be higher than that. S&P 500 also having a good day. Let's go to the daily. Really good day, up to all-time highs. Wow, that's pretty good. Oil down, falling through this old support, turned resistance, turned support again, and now we're breaking down below it. That's an important level, around 68. US 10-year, pretty much even for the day right now, but this will probably turn back around and start going lower as well. Dollar is down on the day, but still a series now of higher highs and higher lows. Okay, so that's it for Bitcoin. Let me check and see if there's any comments. I'm not seeing any comments on YouTube or Telegram, so I am going to call it there for the day, guys. Thank you. Check out bitcoinandmarkets.com. Let me share that screen. Bitcoinandmarkets.com. That's where I do a lot of my writing, all my writing. You can follow me on Twitter at Ansel Lindner and join the Telegram if you're watching on YouTube, t.me/Bitcoin and markets. All right, guys, have a great day, and I'll see you on the next stream. Bye.